Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Tuesday, the 3rd of April, 2018, getting on around 4:43 p.m. Central Daylight Time. So we had a reversal day today. I'm scratching my chin because I said it yesterday. Big down day on a Monday often leads to a retracement of some of that, if not all of it, on a Tuesday. We're getting that. Metals gave up a lot of their gains. Other markets just sort of all over, except the bonds and notes. For those of you that do get my market research that I write nightly and during the day, you know that I was saying yesterday the fact that we didn't get much for rally in bonds or notes was not a good sign. It acted like that market wanted to back off. We had a bit of follow-through also to the upside in the grain markets, making back some of what they lost yesterday. So a lot of reversal days all over the place. Now, when we look at a weekly area chart of closes of the S&P, you still have the market in what we'll call a down thrust. It's not at the lowest point. The lowest point the market made was right here at this day. And that was when the market finished 25.97.75. It has since bounced, and it's still at 26.13 1/4. For the week, still down almost 30 points. When we come to just a regular daily bar, see these lows? People will say if the market bounces here, we had a successful test. I'm not buying into that just yet. I don't know that these lows, you get this close, aren't going to be attacked somewhere along the line. Let's first take a look at the chart, though, and see what the chart is saying. It's not what I think. It's just about what the chart is saying. As we can see, the market had a big break yesterday, made back a chunk of that today. And by the way, if you look at yesterday's decline, you were down 68 points in the S&P. Today made back 38. So I don't want to give you the impression that today made back all the gains of yesterday. It did not. The market also has a pattern of lower highs and lower lows. That is bearish. In addition, you had a bearish crossover where the 18-day average, not today, but yesterday, went underneath. Actually, I'm looking at it today. Where the market, I guess I did this late afternoon yesterday, that's right, where the market now is under the 18, under the 100. I forgot that I had done that. Okay, I see this as a strong resistance area, and I'm not saying the market has to go back there. If the market were to take out 26.59.50, the last rally high, this one with the red arrow, well, that could negate the market. Where's the battle shaping up for the support in the market? I want you to look at the 200-day moving average of closes. Tell me that's not it. I contend it is. That's what this market is fighting at. When you take a look at Bollinger Bands, you had hit them yesterday and bounced away. That's fine. That doesn't mean you won't come down and hit them again. So right now, as this chart is set up, it's bearish. Got lower highs, lower lows. You've got downside momentum. The bias is down because you're under the 18-day average. And in the pure momentum chart, you're still just plain very oversold. So you have an oversold market that's hit downside targets in a bear mode. When you get to the NASDAQ, you have a market that is oversold. The difference here is both numbers closed under 20. They didn't do that in the S&P. They both were under 20 yesterday. They weren't on Thursday. Tomorrow's a very important day in this market. Are you going to embed, which means you get the third day in a row with both numbers under 20 and the momentum which locks in a bear trend, or do you bounce away from here? My guess is the market's going to try to bounce away from here because more times than not, you don't embed. If it does, resistance back up at 66.53, and you'd have to get just over that near 66.54 to negate the downtrend. In the Dow, you have the same pattern as the NASDAQ. Lower highs, lower lows under the 18-day average. You came down, and the 200-day average is right here. See this line that I've got? That's it. The market didn't hit it again today. It hit it only yesterday and the market and bounced. You're also very oversold here. And in the Russell, you hit the 200-day yesterday in the Bollinger Band and you bounced. So our idea is yesterday that you get something of a Monday reversal, a Tuesday reversal. We're not off the money. They turned out to be okay. It doesn't always work out that way, obviously. But all the markets have resistance above them. Most of them at the 100-day average, but they're, as a group, all in oversold territory. So there's room to correct that by getting more of a rally. Another telltale yesterday, in my eyes, was the fact that the VIX didn't go and try to punch through and keep going over the upper Bollinger Band. Ran into a wall there and backed off today, as you can see. Momentum in this market now, the numbers are not overbought. The market is not trending either. It's got a lower low and a higher high, but it's again widening out the Bollinger Bands ever so little. In the T-bond market, you have a market that is, number one, overbought. If we take a look at these numbers, they're both over 80 today, both over 80 the day before, but not the day before. So in order to correct that, if the market drops down, you get rid of the overbought condition. Support way back at 144.24, almost a full point lower. We'll see what the pros do if it gets down there. 10-year note, still overbought as I see it. The market double bottomed here at 120.25.50, right where you're at. Overbought. Uptrend, hit its upside targets way back here, to be honest with you. And yes, you have broken down and gone back up and moved out the Bollinger Band. Haven't really gone that far with the market, but still, market that's been acting bullish. Dollar index, here is a market that's just spinning around the way I'm showing you. Traders are getting annihilated in the currencies. I'm in the elevator here on the Board of Trade talking to traders. What's going on, Ira, with those currencies? And the answer is pretty simple. You're spinning. The market doesn't know if it should be bullish or bearish. It's almost like the eurocurrency. It's a flip-flop of it. And the question is right now, it did get itself into an uptrend, got higher highs, higher lows. The objective's about 90-18, let's call it, and you're overbought already. So to get something really big going here, you have to break out of this sideways action to the upside or break out of it to the downside. Barring that, I think it's just a stepping area where you get stepped on. The flip-flop is the eurocurrency, spinning around inside of this. Will you hit the lower Bollinger Band? You could. You're oversold as can be. You're not trending in this like you are in the dollar index. You have a higher high and a lower low. I don't see anything in that market. British pounds had the lower high, lower low, 3 days in a row now, fighting at the 18-day averages. Momentum is coming down. The market also has a typical seasonal to the upside that kicks in this first week of the month, so I'll be waiting to see if that keeps going or not. In the Japanese yen, is this a turn to the downside? It may well be. The market's got lower highs, certainly lower lows. Now I'm looking for the pros to be sellers around the 94.81 level. I think that they would back out of the market if it got over this high of 95.11. So I don't think they're going to take huge risks in the market, and I think they'll be looking to see if they can get down to 93.88. The problem for them selling is the market's already in oversold condition at a 28 reading. Bitcoin, as I said, Jeff Gundlach had said that he sees a correlation between this and the S&P. If I read it, other people did. Now, if you lose the embedded reading, which you haven't done yet, that could carry you back to 83.68, which, if the correlations hold up as he thinks, could kick the stock markets higher. Right now what the market's doing is it's paying attention to the lower Bollinger Band, but until you lose that embedded reading, this market stays in the bear camp. In the June Brent versus WTI crude, still a market that's gaining on the way up, as you can see. You're at 472. Okay, you've added from the bottom $1.60 roughly. That's fine. If you take a look at the Brent, though, by itself, you have a market that's got lower highs, lower lows. That's a downtrend. It's countered because you're over the 18-day average and momentum turning down. A big nothing. Same in the WTI crude, identical pattern. This market is not oversold. That rather overbought. This is overbought. This is not overbought. That was what I was trying to say. And that is because the market doesn't have a reading over 70 anywhere. Gasoline market, tell me we're not on the money when we're saying that this is the area where the market's stopping temporarily, at least, against the 100-day average in 18. Market's looking for direction. A lot of traders I know don't like selling on from this point into the summer. They like the seasonals, that gasoline prices start going up and the futures either follow or lead them. In the nat gas, for the first time in a long time, I can say that the swing line's bullish. You got higher highs, higher lows. Momentum got itself just recently out of being oversold. The resistance is in two layers at 277 and 279.40, so you got nothing. You have a downtrend. You have an uptrend on the swing line. Bias is down and momentum went flat. That's how the market seems to be playing itself out. I'm going to be writing my gold report starting tomorrow and hope to have it by Friday in your hands, maybe Thursday. If you're not on our mailing list, and we call that list in all honesty, you might want to go to our website at www.iraepstein.com. I'll be covering all these type of charts in there for you as well. You can always click up here if you're watching me on YouTube, or underneath us on many websites says click here for Ira's free info. I'm Ira Epstein. You have a good day.